Hi, and welcome to Traders Talk. And this is Meng Hon, your host. All right, okay, and another exciting week because everything is very bullish. Everything is very bullish. Market is up, and all is also up significantly yesterday. Yeah, and like any other week, we will actually discuss what's on the market and what's happening on the market, and also follow through some of our favorite plays of the year, which is all play. Yeah, and we have actually been going into all trades for quite some months since the last quarter of 2022. We have actually done quite a number of all plays and continuing towards 2023, we are still in a couple of all plays and which has actually generated good profits for us so far. Yep, and we will go through that later in the segment. And firstly, we will cover the market updates. Yep. So for those who have just joined us, welcome, and please like and share so that more people can actually write on the show. All right. Okay, let's go. I hope everything is well for you guys. First quarter has actually ended up quite well, with the market continuing its bullish trend since October last year. Yep. Okay. Let's see. Okay, just put myself smaller. All right, so we'll cover the S&P 500, right? This is actually the S&P index, right? And basically, like I said, market has actually been quite bullish since October. Yeah, if you can actually see, this is actually October where we actually hit the so-called market bottom so far. I mean, this is the lowest point it has actually gone since the downtrend starting from beginning of 2020 to since the qualitative tightening actually started, right? So the market has actually dropped significantly from the highs of about 4,800 and back to the lows of about 3,500, and currently we are actually at 4,100. Yeah, so we have actually not reached the middle point, which should be actually somewhere around 4,003 here, right? Yeah, but hopefully we will be there soon. If there is actually no exceptional what is that exceptional market happenings like the bank runs and all this, right? I mean, then of course the changes which we have actually seen so far in terms of the Fed policy, right? The Fed policy would actually likely bring the market back up. Yeah, and of course the trend. If you're actually looking at the trend, right? If you're actually looking at the trend, this is actually the trend right now, where we are still actually showing higher highs, right? And of course, right now we are actually at this level, and the next thing which we actually want to see is that the S&P, right, actually moving above these highs, which is actually at 4195. Yeah, 4195. Yeah, once it actually breached this level 4195, which was the the previous high, right? Then of course the market would likely actually continue to run up, and of course I think a lot of people would be scared that they actually missed the boat. Of course, still how to say, still be a bit careful, of course, if you're actually putting on positions, and of course for long term, especially don't buy in when the prices are actually going up, right? Always wait for retracements for you to actually add on your positions. Yeah, so at every point when the market actually retraced in the past, right, that would be actually good points for you to actually add on positions to fundamentally strong stocks, and we had actually quite a number of opportunities to actually do that, and we did also cover that in our traders talk during all this time. Yeah. So yeah, I mean for the 1, 2, 3, yeah, this is actually the weekly candle, right? So actually for the past 3 weeks, we have actually gone up, and of course yesterday itself we are actually also slightly up. Yeah, but hopefully we can actually breach this level before actually retracing a bit back to this level here, which will possibly form support. If that happens, then of course it's actually very positive for the market. Okay, so the S&P from these lows, it has actually not gone back, gone above 20%, right? I mean, basically, we always use this indicator when from the lows to the highs, right? If it's actually above 20%, then we are actually in a bull market. So far, S&P is actually still 2 or 3% behind, and of course, anything can happen. It can also come in above 20% within this week, because there's not so much economic news in the current week. Next week itself, on the 14, I think there is CPI announcement, 14th of April. 14th of April CPI announcement. Let me see. Yep, 12th of April then. 12th of April, yeah. 12th of April CPI announcement. So there is actually nothing this week, only towards 12th. There is actually CPI which could also rock the market a bit, yeah. Especially right now, I think yesterday itself, when OPEC has actually announced the production cuts, right? Then of course that actually move all prices up. The thing is, of course, for the April CPI announcement is actually for the March CPI prices. Yeah. So of course, whatever happened on the oil, which is actually for April, would only be reflected in next month's CPI announcement. Yeah. So of course, we may still go on target, or we may still go below the forecast CPI. And of course, if we go below the forecast CPI, then that would actually be quite more bullish for the market, to actually push the market higher, because that will actually ease the Fed's decision to actually raise rates. Of course, the last meeting, they still said that they will actually still look at the data, but of course the market did not really believe or bother on it, based on what has actually happened. The market expectation is that there would not be any rate cuts in May, and of course before year end, they would actually expect the rates to be reduced within this year, as opposed to in 2024. Yeah, this was actually before all the banking issues actually came in. Yeah. Okay, so this is S&P, and of course, if you look at Nasdaq, right? Nasdaq is already have already moved above 20% from its low. Yeah, from its low. And of course, whether you actually want to call this a bull run, I would probably not call this a bull run. I mean, possibly just a bullish market. Yeah, because we have not fixed all the problems which we have on the US economy, right? And of course, we are just above 20%, which is now sitting at 26% above from the lows. And of course, we have actually achieved this last week. Yeah. Not last week, even the week before. I think it is actually about 2 weeks already. Yeah, since I think since the Fed actually came into bail out the banks, right? Bail out the banks, then it has actually been bullish for the market because of the expectation that they do not want more problems to actually come into the US markets, right? And as a result, the QE has actually started, and reprinting of money is actually bullish for the market. Yeah, bullish for the market. Okay, yeah, so that's basically what has actually happened in the past six months. Yeah, 6 months we have actually been going on higher highs. Yeah. Okay, so this is actually on the two markets. So just watch out for the levels. Again, as usual, we actually always watch for the levels, and of course, the next level which we actually look out for is actually at this level, which is 13,700. Yeah, which is actually at this previous high. And of course, if they can actually breach this, then of course it will actually lead to the market actually going, possibly lead to the market going higher. I need to caveat myself because we would not know how the market actually want to move, but we still look at the price action as usual to actually see where the market is actually expected to move, basically on the support and the resistance level. Yep. And of course, this level here about 12,900, yeah, will actually form the support level, yeah, for the Nasdaq. Okay, so yeah, coming back to all, right? I mean, all, if you guys are into all, yesterday itself, all the oil stocks has rallied together with the oil price. And of course, if you look at the oil price, right? I mean, we have actually seen the oil prices actually coming down from the highs since mid of last year, right? From 122 all the way coming down to about 64, yeah, 60 about $64. And of course, we have actually rallied for about 2 weeks. And yesterday itself, the decision by OPEC actually pushed the oil prices higher. And I think the current forecast for oil prices has also been revised to about $95. Yeah, about $95. If not mistaken. Yeah, and of course, that would actually give more leeway for the oil and also oil price, crude oil, and also the oil and gas companies to actually move higher because of the higher oil price. And of course, this is actually also not good for the US economy, right? Because oil is actually one of the basket of goods, right? It used to actually measure inflation in the US. And of course, with escalating oil prices, besides the main commodity of gas, right? Then of course, all the other things that you need to use oil to produce, like plastics and all these kind of things, would also increase in price, hence putting a bit more pressure to the inflation. So this decision is not so favored by the US, and actually it would actually give the Fed more headache, right, in the months to come. Because the inflation would actually be even more stickier with this oil price going higher. Okay, and if you have actually followed us, right, whether in Traders Talk or our newsletter, we have actually did a lot of all plays. I mean, trading on all companies since many months, and I think we started way back from October, I think end of October itself, where we actually started to do some trades on XOM or XOP, right? Yeah, I mean that we actually did way back. Way back, I think what we did was I think in Traders Talk itself, if not mistaken, we have actually did. Let me see. In Traders Talk itself, we have actually did. Let's look for it. Okay, I think we did it on All Play. Okay, this was actually 8 weeks ago. 8 weeks ago, we did on Exxon, and then earlier we did it here also. We did it on XLE. This was 24 weeks ago. We did it on XLE, and then where else? I think we did it on XOP also. We did it on XLE. Yeah, here another one, XOP. Yeah, so even on Traders Talk, we actually covered already a few rounds. Exxon, XOP, XLE. Yeah, XLE. I think this was back in October, if not mistaken. And then yeah, we did a lot of that, and of course, all those actually went well. And also about 2 weeks ago, yeah, on 20th of March, yeah, 20th of March, we in this newsletter, right? I mean, if you guys don't know, we actually issue a newsletter every Monday. It's actually a free newsletter. If you subscribe to it, right, you will actually get this sent to your email for free every Monday. Yeah, every Monday. And let me put up the link how you can actually get this newsletter. Let me put up the link. Okay, so you can get that newsletter through that link there, right? Okay, so actually we did a trade on XOM. We did a trade on XOM end of October, on 28th of October. Yeah, XOM. And of course, when we actually do the trade, right, we also give updates to you guys what's actually happening in some of the trades which we have actually shared for education purposes. And of course, these are also live trades where we actually enter into. Yeah, and of course, during 20th of March, right? What happened is that the trade, the prices for all actually retrace during that time. If you actually see XOM, right? XOM, I think this is XOM. Let's put the daily chart, 1 day. Okay, 1 day chart. 1 day chart. Okay, we actually entered the trade on 28th of February, which is somewhere here. Okay, here. Yeah, we actually entered the trade somewhere here. Yeah, somewhere here, where all price was around 110. Yeah, 110. And the strikes which we did was, I think, 103 and 119. So this is actually the band where we actually traded an iron condor. An iron condor is actually a neutral strategy where we actually want this stock price to actually move around this band up to expiry in order to profit in the trade. Yeah. So of course, it was actually setting in the middle, and after the trade entry, the price actually went up, and after that, it actually went down all the way down, hitting our short put side. That means basically on the put side, what we have is a short put, and then we have a lower put. Yeah. So basically, it actually hit both the put prices. Yeah, both the short put and the long put, right? Prices, and actually it went in the money. Yeah, it actually went in the money. Okay, so and when it actually went in the money, right, sometimes people actually tend to ask a question whether they actually need to make adjustments to a trade. Okay, It depends. Depends on what type of strategy. Some of the strategies you actually need to make adjustments. Some of the strategy adjustments may not be that critical or important, depending on the situation. Okay, and of course, during that time, we also explain in our newsletter exactly what you guys need to do, or exactly what I would actually do as a trader, whether to adjust or not to adjust the trade, since it has actually went in the money on one leg of the trade. Yeah, so we have two legs, one on the upper side, one on the lower side, and on the lower side it has actually hit in the money. And of course, I think at that time the overall trade was actually in slight losses, because of that situation. Yep. So questions you might ask is, if you need to adjust, how to adjust, when to adjust, and of course, if you do any adjustment, will it actually increase or decrease your risk? Yep. And we actually went through in here that some of the criteria which we actually see whether we adjust or not to adjust. Firstly, is like duration. How long is the duration to expiry? Whether you still have a long time for the stock price to actually recover itself, recover itself or no? Yeah, whether you are actually running out of time closer to expiry, and then of course. The other things which you can actually adjust is strike, right? The strike price you can also adjust. Yeah, so these are actually two things which you can actually adjust. You can change the duration, which is extending duration, and then you can actually adjust strike price. Yeah, and of course. When to adjust, yeah, when to adjust. Like I said, whether you still have time in the trade for the stock price to actually recover, that's actually one consideration. And if you do not have time, then of course you can actually extend time by rolling the trade to actually buy you more time for the stock price to actually recover and going back out of money. Yeah, so we are actually doing credit trades here, and of course only credit trades you can actually adjust. Debit trades we rarely do adjustments. We either exit or cut loss if the price don't move our way. Yeah. Okay, so of course, the thing which you can actually go and read this issue 105 on the newsletter to actually go in detail what we actually mentioned here. I'm only going to go through briefly to actually explain to you guys the concept and the considerations which you actually need to take when you actually do adjustments. Okay, so of course, yeah, and of course, what happened here, coming back to our trade, right? We actually in the money, and of course, during that time, we actually still have about 30 over days before expiry, and of course, since we have 30 over days before expiry, right, and the decision for us at that point in time is not to adjust, because we still have time. That's actually one point. And of course, the second thing is when we actually look at this price action, we also need to actually consider uh, uh, whether there is actually support levels for the stock which we actually entered the trade. Okay. And of course, even before we actually entered the trade, right, where how we actually decided to take in the strikes, right, we also look whether those levels are actually support levels or resistance or support levels, and we try to actually place the trades within these levels so that we are actually quite protected on the trades. And of course, for this trade itself, we actually took this as a so-called support level, right? And of course, even though price have actually breached below, this was the previous low, and of course we still have high probability that the price can actually rebound above these prices. And of course we also see that the on the stochastic, right, on the stochastic as another so-called general indicator whether that stock price is actually oversold when it's actually coming down, and of course if it is actually going up, then of course whether it's actually overbought as another indicator whether there is actually likelihood of a reversal. So this is actually one point, and the other one where we can also use to see on the so-called macro level is also going back to the crude oil prices, right? The crude oil price, this is Colgate Palmolive. Okay, going back to the crude oil prices, right? To see what's actually really happening on crude oil, and whether there is actually also support levels for crude. Okay, and of course, when we actually entered the trade, it was somewhere here. It was somewhere here, and on 20th of March, right? 20th of March, we were actually somewhere around here. We were actually here, yeah, on 20th of March when we wrote the newsletter to decide whether we need to adjust or not to adjust. If we were actually here, and we can actually see also at this level, right, that the oil has actually been bouncing around for quite a bit here. Yeah, you can see that oil is actually bouncing around for quite a bit at this level, and this level, right, this level, we can also see that this was also the previous low back in 20th of December 2021, and that also gives us a bit more comfort on the macro level that the oil price, although coming down, right, they're still hitting support levels on the macro level at this level, yeah, at this level, and of course because of that, we also took the decisions, yeah. Probably it's not required for us to actually make adjustments for the trade, even though on the short put side, right, we are actually going in the money, yeah. And of course, we don't know that OPEC would actually cut production, right? We only look at the price action of the stock price action of the general market, or in this particular case, the industry. Yeah, and of course, if you are doing any other stocks, right, you can also use SPX, right, as an indicator on the macro level, right. Whether there are any so-called change in price action or supports that can actually help you decide if you need to actually take action on your trade, or whether your trade is going to become much more worse because the general market condition is also becoming worse. Yeah. Okay. All right. So yeah. So that's how some of the considerations which we took lah. Yeah. To actually decide on that. Yeah. And I think we also we wrote it very clearly here what we actually needed to do. And of course, the other thing which we actually also did at that time, right, was also to see, okay, also to see XO SM, yeah. The other thing which we actually decided to do at that point in time is to actually do what we call legging out of a trade. Okay, legging out is actually what that means when you actually enter a trade, right? Let's say, for example, you actually enter into an iron condor. Okay, an iron condor basically have two elements, right? You guys know that iron condor would have a bull put spread, right? A bull put spread. You plus a bear call spread, right? Bear call spread. Then this becomes an iron condor. Yeah. So this is the bull put spread. Yeah, and this side is actually the bear call spread. Okay. So the bull put spread went in the money. So that part of the trade you are actually losing money. Okay. But of course, on the other side, on the call side, because the stock price have actually gone way down, so this part you are actually making money. Yeah. In fact, when the stock price went in the money on the downside, right, most likely the bull call spread, you would probably reach max profit. Also depending on how long duration you have actually been on the trade. Yeah. And of course, during that time, I think we were in the trade probably about 20 days. Yeah, we were actually 20 days in the trade. There is another 33 days left. But because the price went down steeply, the bull call spread, the premium that actually decayed, the extrinsic value actually decayed by a lot, and we decided to actually exit the trade, which is what we call legging out of a trade. Okay, because you have two legs, right? So you have two legs, right? In this trade, right? One is the bull put spread. One is the bear call spread. Yeah. So we actually leg out here. We actually exited the trade on here by just buying back that spread with very minimal premium. I think we paid about 3 cents. 3 cents to actually exit the trade. Okay. So when we actually exited the trade, right? Then of course we have actually made money on one side we were actually losing money, but because of the general price action of the stock, oversold, support levels, the market prices on the crude oil also having support, we left it in the money, and we actually waited for it to recover. And in fact, it actually recovered a couple of days later after we have actually made that decision. And it went back up, and of course again it came it came down below, but again we are not worried, right? We are not worried of that, so we just left the trade alone. And of course after another I think about 2 weeks, right, we actually reached this level before the huge jump yesterday itself. Okay, so actually before the huge jump yesterday itself, right, the bear put spread was already in profit, and what happened yesterday made it more into profit. They are more into profit, and in fact, I would say even if we leave this all the way till expiry on 21st of April, which is the expiry date, right? We would likely hit max profit on this leg. Yep. So the call side we have exited with almost max profit, and of course with the price movement right now, we would probably also exit with max profit on the other legs. Yeah. So the overall trade would more or less be 100% winner again for the month of April. Yeah, I think we have actually shared this free petrol free petrol series, right? I think for the third month now, and of course every month we do not have to actually pay anything for our petrols. Yeah, so it's actually all free, sponsored by all these what is that? All these oil companies. Okay, so yeah, so that is actually what we did. Okay, what is your position? The other thing which I actually wanted to share with you is that what would your position be if you did not leg out of the trade? If you did not leg out of the trade, okay. So if you did not leg out of the trade, right, that means basically you did not do anything. You did not do any adjustment. You did not even leg out on the bear call spread, right? Okay, what will happen is that now your problem is actually on the other side. Earlier your problem is actually on this side, right? Okay, so if you did not leg out of the trade, what will happen right now is that the bull call spread would probably go into losses right now. Okay, earlier it was almost at max profit. Right now, because the prices have actually spiked so much, and it's actually close to your short call strike of 119, then this trade would actually be tested right now. XOM. Okay, XOP. Okay, so XOM. Let me see. XOM. Okay, maybe I went to the wrong stock. Too many stock, but doesn't matter. Just get the concept, because I think the trade which we did was XOP, not XOM, XOP. This was a trade. Okay, this was a trade. But the chart patterns is actually more or less the same. The chart patterns is actually more or less the same. But let me get back to this XOM. Okay, let me get back to this XOM. So if you actually did not leg out, right, what will actually happen is that this side will actually get tested now. First, you had a problem on the put side. After that, you didn't do anything. You now price actually reverses the other way sharply. Now you have actually problem on the call side. Okay, this is actually also the same thing which this, because we are actually in both trades. That's why I got confused. We are actually in both trades. We did a trade on XOM. We also did a trade on XOP. Okay, so the one which we have actually explained how to adjust was actually XOP. Okay, so if you look at our XOP trade right here, you see that we don't have the call side because we have already leg out, right? And of course, the current one which is actually left is on the put side, and we would probably leave it to expire worthless to get our max profit on this trade. Okay, okay. The more problem which we have right now, I won't say it's a problem. I mean, the problem on the call side, which I actually explained, assuming you did not leg out of your bear call spread, this is actually the thing which will happen. Okay, so here is that on the put side, same problem. Earlier you were tested, now is actually gone out of money and in profits. Say for example, this one, we are now in profits of about $50 for the bull put spread, for the bull put spread of the iron condor. Okay, we are actually in profit by $50. Okay, so on this side, we don't have an issue. We don't have to worry. Okay, now we have actually to worry on the bear call spread side. Okay, and now this bear call spread, we are actually losing about $16 at the moment. Is it 16? 16, yeah, we're actually losing about $16 in the moment, but the overall trade is still profitable about $34. Okay, the reason why we did not leg out, we actually tried to leg out of this trade also. Okay, but of course, what happened is that the price which replaced, I think it was also 3 cents. I mean, it was also 3 cents. We did not get filled lah. Yeah, we did not get filled to exit at 3 cents. I think it was probably trading about 4 cents, 5 cents, 4 cents, 5 cents, 3 cents. I mean, we just tried to save 1 cent, right? We just tried to save 1 cent, and it did not get filled when the price actually came down. And of course, once it started to reverse, we did not do anything. We just left it, and because of that, the losses actually coming out of this call side will eat into the profits of the put side. Okay, if you would have leg out, right, then of course on the put side, the profits would be a full profit, and there's no leg that will actually eat into the profit. So you can also exit faster if you decide to actually exit the trade, or if you do not want to exit the trade, if you feel that you can actually hold the trade till expiry for full profit, then it's also possible. Yeah, so decisions to leg out in a trade is also important, because there's no point for you to actually uh, um, uh, wait for 3 cents, 3 or 4 cents to actually expire, where you actually need to wait 1 month to actually get that 3 or 4 cents. But you will actually take this kind of a risk, that in case the price reverse strongly, a position which was actually profitable, yeah, very profitable, in fact, almost 90% profitable, because you actually wanted to have that another 3 cents, you're actually risking a big chunk of the profits. Yep. So learning how to actually leg out of trades is also very important in trading. Yep. Okay, so of course, the positions would actually be a bit more difficult to manage right now, right? When it's actually on the call side, on this side, yeah, because looking at where the oil price is right now, there is probably more leeway for the stock price, to actually run up higher, yeah. And of course, if it runs up higher, it's always more difficult to actually manage trades on the call side. On the put side, is okay, it's easier to manage, because if you are actually on a stock, on the, let's say a good stock, right, price tends to actually rebound and actually go up, yeah. But if the market continues to go up, right, it can go up forever, right? So when it goes up forever, it's actually very difficult for you to actually adjust and get out of the position if you are actually on the short side of the stock, yeah, on the call side, short call side. Okay, so for this one, if I would say, okay, I would say probably what the best thing to do is wait for a bit of retracement, and when it comes, exit the trade. Yeah, exit the trade if you have not adjusted on this trade on the call side. Yeah, because likely it will breach because today you see it is also continuing to actually go up slightly, but I would feel that there might be some retracement coming. I mean, if you're lucky, then we get some retracement. When it retraces, then that's the time where you can actually exit with a little bit of profits. Yeah. Okay. Yep. So yeah. So this is the one which we did, right. Okay. XO XO XOP for the one which we actually explained on the newsletter. Sorry for the blunder, right? XOP, and then of course XOM was another trade which we actually entered separately. XOM was the earlier all play. Then we went back to XOP. Yeah. Yeah. So again, what is actually possible right now on the all stocks, right? Okay. There may be other possibilities. Let's see what we can actually do. Which stock you want? Which all stock, right? You actually want to actually trade? XOP, XOM, or XLE. Then we can actually see together, right? How we can what kind of trades which we can actually structure. Yep, you can just put on the comments whichever you want to do. Yeah, this is CL, right? Crude oil. Bear in mind the oil price is going to go up further. Yeah, go up further. 95 is actually the target. Yeah, 95 is actually the target. But of course, before it actually reached the targets, right? Then of course, let me draw it nice with a straight line. Here, yep. So this of course is one. I think this level of about $82 would actually be breached very easily. Yeah, based on the rush for not for gold for the gold all rush right now. Yeah, and of course the levels which we need to actually see the next higher levels, right, for crude, right, will actually be here. Why can't I draw a straight line? Just put a horizontal line here then. Okay, this level $93, the high levels for crude. Yeah, $93 high level for crude. And of course on the lower side, right, I would say these levels would actually form the new support. Yeah, form the new support, which is at about $72. Yeah, so 93 $72, 93 and $72. So this is actually on crude. And in fact, if you actually want to trade on crude, you can also do a crude, right? Futures, crude oil, iron condor. If you can actually get 72 and 93 as the price set up. So let me see. So nobody wants to do any trade. Okay, so crude is one. Crude is actually one possibility. If you actually can set up 72, 93. Let's see. I have not traded crude before. /C, I think. Let's see. May 17. May 17. 72, 94. 72. Let's put it here. 70. Let's put 73. Let's do it here. 90. This is actually $3 wide, right? $3 wide. 94. 94. 94 is actually here. 94 is a bit too far. 94 is actually a bit too far. Because you probably won't get a lot of premium at 94. So what we can do is put it up at 90, 93, for example. Okay. 1993. Okay, so this basically we would do collect 90 cents, right? 90 cents. Okay, 90 cents. 900 credit transaction. Okay, so you collect $900. So crude, this is actually a bigger trade times by 10. So yeah, I mean, look at your. This is actually a bigger. That's why I don't do this, because the max loss is $2,100 and the max profit is $900. Yeah, so probably I will skip because this is a bit too too big of a risk for me, for myself, $2,100. So I probably won't do that. But basically, just to show you that basically that kind of structure is actually possible for you to actually do, yeah, on crude futures. Okay, if you don't do that, maybe we see other stocks, right? XLE. Okay, let's see again on crude, right? On crude, when did it actually reach about $95, which is basically the target price for the current crude oil. This is like crude $95. So basically, this is somewhere around October 22. August to October, yeah. August to October is actually at $90 over. Okay, then we can actually go back to the stocks, right? XLE. Let's see XLE, right? You can actually go back to the stocks XLE in August, October, right? August, October, August, right? Okay, October. Okay. Around August, October, basically this stock is already trading at the current level of 86, and then it may possibly go up more. So I won't want to actually trade on this. I would actually pick another one. XO. XOM. Since we are possibly in a loss, right? XOM August. Well, actually, all stocks has actually rallied by a lot since August. Even though price actually came down, all stocks has actually rallied. All stocks has actually rallied. Yeah. Yep. So we can't use that as a so-called indicator to make a thesis for ourselves. I mean, sometimes we also need to actually make a bit of thesis on the to see if there are any historical patterns for the stock, right? To actually uh, do a new trade. Okay. So at the moment, I won't actually enter into any stocks, any trade right now. I will let the price actually cool back a bit, let it test. Let's say, for example, on this Exxon Mobil, right? Let it actually come here and test this previous high level of 119, right? Test it, yeah, and see what is its reaction, yeah, whether it actually do a retracement or it actually continue to go back up, yeah. If it actually hits resistance here, okay, if it actually hits resistance here, then it might be possible for you to actually do a iron condor, uh, do an iron condor on the upper side, lower side. Preferably, you need to actually do it below this gap, yeah, below this gap. Something wrong with my mouse. I just lost my mouse, so I don't have a mouse. Below this gap, yeah, below this gap. Let me just. Oh, my mouse came back. Okay. So try to actually set up one somewhere around here below this gap, yeah, on the lower side, and on the call here, on the call above. Once you see what actually happens around this level, okay. And the other thing is to give you additional security, right? To give you additional security, because the expectation is, of course, for the all stock price to actually rally up, right? And there's again possibility for it to actually hit your upper strike, right? Upper call strike here. So on the put side, right, you can actually double up the spread. That means basically you do a two bear put spread below. Do two bear put spread below. Yeah. In case the price rallies, right, then of course this position will actually be protecting this for a while, waiting for it to actually either hit it and come back down. Yeah, come back down. So if it rallies up quickly, then of course your trade can actually still be protected because of the bullish trade below at this level. But of course, bear in mind that if you actually do this, then of course you would actually double up your risk on the lower side, in case the price retrace, right, then the losses on this side will actually be much bigger, and you have already also moved up from the previous support level. Then there is also some risk on this level. Yeah. Okay. So that's some of the things which you actually need to take care. Yeah. So let it cool down a bit. Let the oil price cool down a bit before entering any trades on all stocks for the time being. And right now, just enjoy enjoy taking profits, right? Enjoy taking profits on your earlier all stock which you have actually entered, right? Uh, Taking profits and just relaxing for a while right now on this side. Okay. Okay, so yeah, so that's what we actually wanted to cover. Hope you actually get the idea, right? How to actually manage your positions, and also exit when is the right time for you to actually leg out a trade to capture the max profits, to capture the max profit on one side of the leg, and without uh, leaving the risk for you to actually make the few cents in one side of the leg. You can actually leg out, and when the prices reverse, then of course you can actually also exit out faster on the other side of the leg, which was actually going in the money. Yeah, so that's the beauty of doing neutral trades, because whether the price actually move up or whether the price actually move down, right, there is actually also always ways for you to actually make profit. And even though it actually goes outside of the band, you can also use this kind of techniques to actually um, manage your trade and to actually get into back into profits much faster. Yeah. Okay. So have a good trading week, and of course, hope that the market continue its run, and we can actually share more with you either on our Facebook, our TikTok channel, and also our newsletter. All right. Okay. Catch up.